Hello everyone. This is the pre-market report video for today, 24th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, finally after 5 days of continuous negative closing, Nifty closed positive. I think this is due to three reasons. One, technical bounce, as on last Friday, Nifty closed below 200x moving average. So those who are shorted the market might covered. Then second, GST Council outcome, which we discussed in detail in the last video. And finally, low US PC inflation number, which improved the global momentum. So it's not just Indian market closed positive. Most Asian market also closed positive. Only Chinese market was negative, and that too due to some tech stock weakness. And don't know why even Indian IT stocks didn't perform well either. I mean, if you see the top 5 negative contributors on Nifty, 2 of them were IT stocks and 3 of them were from auto sector. Regarding auto sector, we discussed already yesterday, probably maybe due to psychological negative as the GST percentage increase. But as I said, don't know the reason regarding the IT sector negative. In fact, yesterday most brokerages said they were positive on IT sector in the upcoming 2025. Despite that, it was under pressure yesterday. Sector wise, please ignore media and realty as they are very small sectors. So barring auto, all others closed positive. Then about institution, FII trade volume was only half of their regular trade volume, which is understandable as most Western companies will be on holiday this week. However, still FII was net sellers as they net sold for marginal 170 crore rupees. On the other hand, DI net bought for approximately 2200 crore rupees. Then regarding open interest volume analysis, still FII increased their short position by 3% and no change on the long position. Whereas proprietary traders reduced their short position by 13% and increased the long position by 3%. If we see the option change in open interest, proprietary traders sold lot of put options, not much in the call options, but FII sold both put option and call option. I mean, last week both FII and proprietary traders both were negative, so it was easy to predict. But now proprietary traders started to reduce their negativity and FII increasing their negativity. So can we say proprietary traders turned positive? No, we can't say that. Still their open interest position, which wants the market to go down, was 2.3% higher compared to the open interest position which they wanted to go up. Hence really today end open interest might give some definite answer about their stance. Today's market price action I expect it to follow on the Thursday expiry, but please remember it's just my opinion, I can be completely wrong. As it's a most complicated expiry, no US market for defining the global momentum, year end expiry but not the year end, since FII can close their position even on next Monday for the tax purpose. So possibly they will try to make the money from the expiry rather closing it. Anyway, I like to spill all the data beans on the table so it will confuse the viewers even more. That said, those were the things I want to discuss about the yesterday's Indian market. Then coming to US market, during weekend, US Congress and Senate increased the debt ceiling limit, so no problem until March 2025, and generally in the last 40 years, most of the time December month last week, US market closed positive, which in turn created the term called Santa Claus rally. So both provided their positive momentum. And in addition, Bloomberg released an article that what major banks projecting about the bond value at the end of next year. If required, please pause and have a look. Other than the top 2, most banks projected a significant drop in the bond yield, and 2 of the top 4 American banks, Wells Fargo and Morgan Stanley, both expecting over 1% reduction. This bond yield mostly follows the interest rate. So what it is indirectly conveying is, though Fed said that they only performed 225 basis point cut, this Wells Fargo and Morgan Stanley stance indirectly conveying 3 to 4 interest rate cut. So yesterday for the third day in a row, US market closed positive. Dow Jones increased marginally by 0.16%, S&P 500 up by 0.73% and Nasdaq outperformed 0.95%. In case of VIX, it further decreased 8% and moved down to below 17. Then no major change in oil. Brent crude closed near at $72.5 US per barrel, and at the time of this video, WTI crude trading near $69.5 US per barrel. Just for info, tonight and tomorrow there will be no US market and no major European market. So as I said, Thursday expiry will be very tricky. Coming to Indian ADR, Wipro alone closed negative, all other closed positive in varying degree. So if we calculate the arbitrage, Reliance GDR, ICICI Bank ADR indicating a flat opening, Infosys indicating the positive trade. On the other hand, HDFC Bank and Wipro indicating 0.5% negative arbitrage. I mean, if we see all ADR in the last 2 months, both Wipro and HDFC Bank always had some dollar positive premium. So maybe it's just a profit booking. And in the same way, just for info, in the last 2 months, Reliance GDR had a negative premium compared to Indian market. So only along with the arbitrage difference, I had this adjacent separate column. Overall, ADR indicating mixed to positive stance. Then about GIFT Nifty, early morning today, while making the video, it was 23,800. Considering the minimum premium to spot market, for now it's indicating gap up opening of 40 to 60 points. It might change since there are some Japan influential macro is scheduled release before our market opening. So these are the things happened yesterday in the global market. Now let's move to the new India related info. First, yesterday in the aftermarket hours, TRAI mandated the new tariff rule that telecom operators Airtel, Jio and Vodafone Idea has to provide cheaper tariff plan exclusively for this voice and SMS service without the inclusion of data, which all the operators were against it, but government mandated it. I personally think it's negative for the telecom operators because over 150 million users in India use mobile only for call and SMS purpose, but so far still the Indian telecom operators as a bundle, they charged the premium with the inclusion of data. Now this call and service only plan probably will impact negative on their ARPU, average revenue per user. So all those telecom companies will be on focus. Then second, government insurance agency IRDAI released the whole year annual report. To be honest, it's very much mixed and complicated as insurance got lot of subsectors. So if I explain it, then video might get bigger. So I will provide the summary NDTV profit news link in the pinned comment. And I expect all the insurance companies also will be on focus. As a summary, global momentum continued to be on positive and in line with that, GIFT Nifty also indicating the gap up opening, which is good. But FIA and proprietary traders negativity in the index derivative market open interest is a bit of concern. Let's hope proprietary traders change their stance today. About the things to look out, before our market opening, Japan's last interest rate decision monetary policy meeting minutes is scheduled release. Because there will be no US or European market today, and if any negative mention in the meeting minutes means, then that might influence the global momentum. Then there is nothing that I'm aware of is scheduled release during our market time. Finally, in the night for US, durable goods order and new home sales data are the some of the items we need to keep an eye out today. Coming to technical, Nifty opened 150 points gap up and was positive throughout the session, then closed above 23,750. Thus on the daily chart, it formed a doji-like and inside bar candlestick pattern. Here, even though Nifty climbed about 200 exponential moving average, it is still below all other key moving averages 10, 20, 50 and 100 exponential moving average. Additionally, RSI and MACD momentum indicators showing a negative bias on both daily and weekly chart. So going forward, if Nifty moved decisively above 23,850, then that could possibly trigger the short covering and might move towards 24,000 where the next resistance is placed. On the downside, support is at 23,540. A breach below will increase the selling pressure. Then in case of Bank Nifty, it opened around 280 points gap up and outperformed Nifty and closed above 51,000. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern and considering the last 2-day candle, it formed the bullish Harami pattern formation, which is a popular trend reversal pattern. However, I don't believe the sentiment improved. 100-day exponential moving average is the immediate resistance 51,650 followed by 52,100, which is crucial for trend reversal, while support is at 51,000. Regarding the options, the maximum call option open interest was at 25,000 strike followed by 24,000 and 24,500 with maximum new call option rating at 23,800 strike, then 24,000 and 25,000. On the put side, the maximum open interest was at 23,500 strike, followed by 23,000 and 23,700 with maximum new put option rating at 23,500 strike, then 23,700 and 23,800. Thus, from options data, whole 23,800 to 24,000 zone is the resistance and support is at 23,500. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.